Do you know what the most dangerous sound on Wall Street is? The silence before the fall. When everyone starts saying the market is only going up, this stock is a once-in-a-lifetime opportunity, or it can't go wrong. Stop everything. That's the exact moment greed starts screaming, but you only hear whispers of euphoria. It's what analysts call irrational exuberance, a collective state where fear disappears and the crowd begins to buy without thinking, driven only by promises of easy profit. Want an example? Imagine people paying the price of a popular car for a flower. This really happened in Holland in 1637. It was just a flower, the tulip, but it became a status symbol. Everyone wanted it, everyone bought it, until suddenly nobody else wanted it. What's up? Boom! The bubble burst. Today, this flower has another name: hyped stocks, unfounded cryptocurrencies, NFTs, rare digital art, and so on. The pattern doesn't change. When everyone seems to be winning, that's where the danger is at its height. Because if you get into this game too late, you're not investing, you are the product. Attention, when the market seems too easy, it's because it's about to teach you the most expensive lesson of your life. Have you ever seen a product so new, so technological, so revolutionary, that no one could really explain how it worked, but everyone wanted to invest? Be careful, that's where the monster lives. Before the biggest single-day stock market crash in history, 1987, banks created something called portfolio insurance, an automated system to protect investments if the market fell. It seemed brilliant. It was sold as Wall Street's seatbelt, but no one stopped to ask, what if everyone pulls up their seatbelt at the same time? Response: the car overturns. These financial innovations, whether it's a new form of portfolio insurance, a crazy derivative, or these days, an AI algorithm that picks stocks for you, have one thing in common. Few people understand, but everyone trusts. And that's where behind-the-scenes greed begins to do its dirty work, selling a product that looks pretty on the outside, but is rotten on the inside. Have you seen this today? Promising cryptocurrencies with no real utility, quantitative funds that no one can explain, shares of companies that have never made a profit but are worth billions. Yeah, the rule is simple. If you don't understand what you're buying, then someone else much smarter is making money selling. This to you. Want to learn how to protect your money before the next collapse? Sign up now and stay one step ahead of the crisis. Now tell me, what's the point of having traffic lights if no one is watching the traffic? This is the third sign before disaster, the absence of those who should bring order to chaos. When regulators, the SEC, the Fed, Congress, the Treasury, decide to sit back, turn a blind eye, or simply taking too long to act, the market turns into a lawless party. And you know how every out-of-control party ends, with someone paying the bill, and it's not the banker, it's you. It was like that in 1929. The government believed the market could self-regulate. The result, a collapse of 89% more, followed by hunger, unemployment, and despair for more than a decade. That's how it was in 2008. Banks were selling junk bonds disguised as premium investments, and nobody, did nothing until the bomb went off. And when it did, it went into your savings, your 401k, the equity in your house. Do you know why? Because when the game is going well for the big teams, no one wants to interrupt it. Politicians get re-elected with a growing economy, not with a banking investigation. So the system keeps inflating until someone trips on a spark and everything catches fire. The question you have to ask yourself today is simple. Is the market experiencing healthy growth? Or does it feel like a noisy party with no one at the door? If the regulatory bodies are missing, you need to be more present than ever. The weight of debt, the enemy that walks beside you without you realizing it. If there's a silent, deadly poison that corrodes the foundations of our financial security, it's debt. And not just any debt, easy credit, the kind that appears like a magic solution but turns into your worst enemy when you least expect it. This is trap number 4, a recurring theme before every major financial market crash. The problem begins when easy money causes everyone to start spending what they don't have, gambling with borrowed money, and living as if tomorrow will never come. But tomorrow always does, and when it does, the bill comes double. Look back to 2008, perhaps the most iconic crisis in recent history. Back then, banks in the United States were handing out mortgages like candy to children. People without jobs, without a proven income, were able to finance a home because the market believed real estate prices would rise forever. But what was happening? It was a house of cards built entirely on bad debt, disguised as gold by big banks and investment funds. The bubble was gigantic, unsustainable, and when the first card fell, it was a domino effect. Homes lost value, funds collapsed, jobs evaporated, and dreams were crushed. In the US alone, more than 10 million people lost their homes. This isn't theory or distant history. It's real life, with real people suffering. Now, what's terrifying is that the same pattern is repeating itself. Right now, in 2025, credit card debt is reaching record levels, student loans are reaching unpayable levels, and companies, yes, companies, are carrying out buybacks, repurchasing their own shares, using money they don't have, inflating false bubbles of value. Investors are leveraging options and derivatives, betting big, as if the market were a casino and they could control the outcome. But they can't. All of this is nothing more than debt, piled on empty promises. And when the Federal Reserve or the central bank starts raising interest rates to curb inflation, these promises turn into unpayable debt. Here comes the crucial question. When the storm hits, who will be standing? Who will succumb? The answer is clear. Only those who saw the tsunami coming before the wave broke and had the courage to act. Because the number one rule for surviving in times of crisis is simple. If you need financing to invest, you're not investing, you're gambling. And in the financial casino, the house always wins in the end. You've seen the signs here. It's clear. The market seems too easy, and everyone wants in on the fun. Magical innovations that few understand, but everyone wants. Regulators who seem like passive bystanders, allowing the system to be sustained solely by debt. And debt, that silent beast, can swallow everything in the blink of an eye. Now tell me, how many of these signs are you already seeing happening today? Because here's the cold, hard truth. Crashes aren't accidents. They're the inevitable consequences of repeated bad choices. The only difference between those who sink and those who survive is preparation. Will you continue with your eyes closed, praying that this time will be different? Or will you open your eyes, act before the storm begins, and position yourself to reap the rewards after it passes? The time is now, not tomorrow, not when the market is already in freefall. Build your emergency fund as if your life depended on it, because it does. Cut out the unnecessary. Learn to invest with solid fundamentals and don't be fooled by shortcuts or easy promises. Be liquid to seize opportunities when prices plummet. Don't rely on luck, because luck always arrives late, and in times of storm, only those who prepared strategically survive. Because in the end, one thing is certain, the market will fall. It always does. The only question is when, and when it does, will you be ready to resist, or will you be one of the broken, desperate crowd, wondering what happened? History is repeating itself before your eyes. Now all that's left is for you to decide. Will you be a bystander, watching everything crumble helplessly? Or will you be the survivor, the one who saw the danger, acted at the right moment and secured your future? The decision is yours. The time is now. If you don't want to be another victim of the market, click subscribe and discover how to invest intelligently and safely. The market doesn't collapse out of nowhere. Before it collapses, it sings, it whispers signals, it screams silently for those who know how to listen, and those who ignore it pay dearly. It always starts with a fever. Everyone making easy money. Investing seems simple. Just leave the money there and watch it grow. Ordinary people with no knowledge whatsoever start to feel like financial geniuses. And when the market seems infallible, that's when it's about to fall to its knees. This is the first sign. Blind optimism. Uncontrolled speculation. People start betting on stocks, cryptocurrencies, startups, and promising things, not because they understand the fundamentals, but because everyone else is doing it. It's the herd effect, fueled by collective greed. It's the euphoria before the abyss. Then comes the second poison, revolutionary innovation. Something so new, so technological, that no one understands it, but everyone wants it. Derivatives, DeFi, AI that chooses stocks for you, tokens that promise eternal passive income. But behind the pretty graphics and technical terms, what lies is ignorance wrapped as opportunity, and the market loves to sell complexity as genius. But what it ultimately delivers is collapse. Here we come to the third point, and perhaps the most cowardly. The regulators disappear. When you need them most, they disappear. The SEC, the Fed, Congress, all too busy or too slow. No one wants to cut the party short mid-dance. After all, the market will adjust itself, right? Wrong. When there are no brakes, the train derails, always. And finally, the rope around the neck, the debt. It's when people, businesses, and governments spend what they don't have, gamble what they can't afford to lose, and live as if interest rates will never rise. But they do. And then the castle falls. It was like that with houses in 2008. And today, it's all there again. Maxed out credit cards, leveraged companies, investments being made with borrowed money. It's as if everyone is sitting on a powder, with a match in their hand. The secret of investors who survive crashes is here. Sign up to receive exclusive tips and change your financial future. The question is, are you going to be another one who pretends not to see? Because now that you know the 4 signs, you can no longer say you didn't know. If you have investments, if you have a family, if you have dreams, you need to prepare yourself before it's too late. Build reserves, cut the excess, learn to invest strategically. And when the crash comes, because it will or come, you will no longer be a victim, but someone ready to buy what everyone else is panic selling. The market will fall. This is not pessimism. It is cycle. It is history. It is mass psychology. The only question that remains is, will you watch it break down, or will you build your freedom in the midst of chaos? How to protect yourself before it all goes wrong. The smart investor's war plan. Knowing how to spot danger is just the beginning. Now comes the part that separates those who survive and thrive from those who lose everything. Act strategically, because what most people do in boom times is exactly what most people lose in bust times. And you're not here to be the majority, are you? So listen carefully, because this is a financial war plan. First, build your reserve as if your life depended on it. Because guess what? It depends. Crises don't send you warnings. One day you wake up and the market has dropped 30%. Your job is at risk. Your retirement has evaporated, and the rent is still due. Have cash, have liquidity, have peace. 3 to 6 months of living expenses. Untouchable. Second, don't finance promises. If you need to use a credit card, loan, or brokerage margin to invest, you're not investing, you're gambling. The market is a Russian roulette wheel with debt on the table, and when the trigger is pulled, it's always on the chest of those who can't afford to lose. Third, stop trying to predict the top and bottom. You're not a prophet. Not even the world's greatest investor knows the exact date of the collapse. Trying to time the market is like trying to predict when a storm will start by looking at the sky. What works? Consistency, strategy, long-term. Fourth, use chaos as an opportunity. Crises are sell-offs in disguise. This is when assets worth their weight in gold are sold at rock-bottom prices because fear has taken hold.
Delta rocket
This is
carrying
when you
glass,
plant the
a
seeds
gamma
of
ray
your
telescope
financial freedom,
searching for
but
unseen
only if
physics
you're
in
ready,
the stars of the
emotionally,
galaxies.
technically, and psychologically. And lastly, perhaps most importantly of all, invest in yourself. Because your greatest asset, it's not a real estate fund, it's not a blue chip stock, it's not a rare crypto asset. It's your ability to generate income. Think strategically and not panic. If you want, I can continue with this style for the next themes, such as how to identify opportunities in the midst of a crisis, what wealthy investors do differently during a crash, which assets historically resist market crashes. Have you ever heard that seductive promise of easy gains, quick returns, or investments that only go up? Well, that's precisely where the danger lies. One that can destroy your financial life in a matter of months. This is the market's most dangerous trap, the illusion of easy money. It deceives everyone, from the novice to the most experienced investor, because it plays on our greed and fear, the most powerful emotions in the investment world. The problem is that when something seems too good to be true, it almost always is. Instead of investing in solid fundamentals, real companies, valuable products, and healthy economies, many people end up throwing themselves into pyramid schemes, unbacked cryptocurrencies, overvalued stocks, or exclusive opportunities that promise to multiply your money overnight. It's like betting on a lottery ticket, waiting for luck to knock on your door, instead of building real wealth. But the brutal truth is this. In the market, risk is always present, and where there's high risk, there's a high chance of losing everything. The problem is that this trap exploits time. While you wait for the miracle to happen, your money can evaporate and the loss can be irreversible. Time in the financial market is your most valuable asset. And when you waste time on dubious bets, you also lose the chance to build real wealth. Need an example? Think of the dot-com bubble of the early 2000s, when internet company stocks soared without any real basis, based solely on hype and exaggerated expectations. When the bubble burst, investors lost billions. Or the cryptocurrency boom of 2017, followed by violent crashes that left many at a loss. And that's not all. This kind of fast money mentality also leads to emotional decisions. You buy high, sell low, rotate your positions frantically, and in the end, you end up paying dearly in fees and losses. The lesson here is clear and brutal. Sustainable financial success doesn't come from shortcuts. It comes from discipline, study, patience, and strategy. It comes from understanding the true value of things, building a diversified portfolio, taking advantage of compound interest, and resisting the temptation of easy money. If you fall for the illusion of easy money, the bill will arrive, and it usually arrives when you least expect it. The choice is yours. Do you want to be another statistic of market victims? Or do you want to build a solid foundation that can weather the storms and truly grow? Remember, there's no magic formula, there's preparation, knowledge, and determination. And it's this combination that separates the survivors from those left behind. Have you ever stopped to think that the greatest weapon against a financial collapse isn't a fancy investment or a secret market tip, but something simple, your emergency fund? It seems basic, but that's where most people stumble and lose everything. Imagine a ship in the middle of a storm. If it doesn't have a strong hull, it will sink quickly. The emergency fund is that hull. It's the money set aside for you to use when the unexpected knocks on your door. Job loss, a medical expense, or even a sudden drop in your investments. Without this shield, you'll be forced to sell your assets at the worst possible time, at rock bottom, burning all your hard work. The worst mistake is to think of a reserve as idle money. It's not there to yield, it's there to protect. If you keep investing this money and it disappears at the first crisis, you're literally throwing away your security. The golden rule is, save the equivalent of at least 6 months of your essential expenses in a super safe and liquid investment. This may seem like a lot, but consider that it's what will keep you afloat when the market crashes. And that's not all. Having this reserve means you don't have to panic at the first sign of turbulence. You gain time, emotional control, and can wait for the Market to recover so you can act intelligently, not desperately. The psychology behind this is simple. Security breeds trust, and trust is the foundation for any rational investment decision. Those who invest without this security are walking a tightrope, vulnerable to any surprise. And the market loves to punish the unprotected. If you really want to play to win, start with the basics. Before thinking about extraordinary gains, build your shield. Only then will you be ready to face whatever comes your way, be it a crisis or an opportunity. Have you ever noticed how, when it comes to investing, the biggest battle isn't against the market, but against yourself? Fear and greed are two monsters that live in every investor's head, and they can destroy your portfolio faster than any crisis. When the market rises, greed kicks in. This will go up forever. I'll invest everything now to get rich quick. You see stories of people who became millionaires overnight and want to be the next. The sigh, truth? That's an illusion. The brain gets caught up in the short term, the promise of easy gains, and forgets the real risk behind it. On the other hand, when the market plummets, fear takes over. I'm going to lose everything. I'd better sell before it gets worse. I'll stay out until this passes. This panic causes you to sell at the worst time, create real losses, and miss the recovery cycle, which, believe me, always comes. This is where investment psychology comes in, the famous investor behavior. The market isn't just a fun roller coaster, it's a mental test. Those who control their emotions have a tremendous advantage. You need to understand that ups and downs are part of the game. There's no profit without risk, nor growth without decline. Investing intelligently means learning to ride the wave, avoid impulsive decisions, and maintain discipline even when everything around you seems to be falling apart. This is where strategy comes in. Diversification, informed analysis, a clear investment plan, and above all, emotional preparation. The market doesn't forgive those who act impulsively, but rewards those who act calmly and consistently. So, before you try to make a fortune, learn to master your greatest enemy, yourself. Without this control, even the best strategy will crumble. The financial market waits for no one. Those who close their eyes to the signs are doomed to lose. Now that you know the patterns that lead to collapses, the choice is yours. Be one of the failing crowd, or become a prepared investor who takes advantage of crises to grow. Sign up, learn, and be ready, because the next big wave is coming. Will you surf or will you sink?